Hello, everyone, and welcome to this week's edition of our weekly coaching webinar. I'm really glad everybody could join us today. Today, we're going to be diving into 3 essential steps to start a business credit profile. So again, I'm really excited everybody could join us. We get a lot of questions today. I get a lot of questions about exactly how you start building business credit. A lot of people get stuck in this part of the process, especially in the part of the process of getting vendor accounts. So today, we're going to be diving into this. We're going to be talking about exactly how you go through the initial steps of building your business credit, getting yourself set up to start applying for business credit, even giving you some information on exact sources that you can go to initially start a business credit profile and score. So if you have any audio issues or any issues hearing me or anything like that today, make sure you go ahead and type them in the questions box, and I will adjust my audio as need be. So let's go ahead and dive in. Before we get started, let me introduce myself. My name's Ty Crandall. I'm actually the CEO over here at CreditSuite. And what we do at CreditSuite is we help companies build business credit and financing. We also help entrepreneurs offer business credit and financing as a service. So if we can ever help you in that right, please let us know. We've even put together a free guide for you that's a step-by-step guide on building business credit that's available at creditsuite.com/EIN credit. So make sure you dive in and check that out. Now, enough about me and enough about us. Let's get started. So today, most entrepreneurs don't know much about business credit. As a matter of fact, entrepreneur.com reports this at about 90% of business owners actually know nothing about business credit whatsoever. So today, of course, I'm really hoping to change that and kind of introduce you more to business credit. So if you're somebody that's not familiar with it, don't worry, you are definitely not alone. Now, business credit is basically credit that's linked to your EIN number, not your social security number. So you're familiar with your consumer credit, right? You go in to a store, you give them your social, they pull your personal credit report. Well, you can also have a credit report linked to your EIN. So if you were to go apply under this, you could apply giving them your EIN number on an application, not your social security number, and you could build a credit profile linked to your EIN that's not linked to your social, giving you the ability to go out and get kind of similar kind of credit you can in the consumer world, but without the liability. So since this credit's not linked to your EIN, it offers a ton of significant benefits for you. And one of the benefits is a credit profile can be built for a business that's completely separate from the business owner's personal credit profile. So what happens is this really doubles your borrowing ability. So if you go into Target and you get a credit card on the consumer side, you can't walk in the next day and ask them for another credit card. They're going to be like, sir, ma'am, you already applied, you already have a Target credit card. But you could walk into Target, get a credit card, and then turn around and go in, give them your EIN number, and get a business credit card. So this really gives you double the borrowing ability, because not only can you have this credit profile and all this depth in the consumer side, but you can do exactly the same thing for your business. And credit limits and capacity on these accounts is much higher than with consumer credit. Capacity really is what it's all about, because here's the deal. As an individual, you don't need to have high capacity credit cards, okay? And this is what we really saw when the whole mortgage industry collapsed. There was a lot of people out there that had $20, $30, $50, $100,000 credit limit credit cards. And one of the first things that credit issuers did was cut all of these limits, because what they found was that consumers weren't using even a fraction of the limits they were actually allowed. Now, a business on the other side uses and needs a lot more capacity. So for example, I've never spent more than $1,200 at Dell or $2,500 at Apple, because I've only needed to buy one computer at a time for my home. But then again, on the business side, I've spent $12,000 for computers because I need to fill an office full of computers. So as a business owner, you just need greater capacity for your business cards than consumer cards. And this is one of the things I really want to point out, because look, your personal credit cards were never intended to be used to build a business, ever. They weren't designed that way. They were designed with capacity that you may use on the consumer side, not as much as you would need on the business side. And this is why SBA says that business credit limits are about 10 to 100 times higher than consumer credit, because a business has a need for greater capacity. Plus, business credit can be built really quickly. An initial credit profile only takes 30 to 90 days to initially get set up, and you're getting real credit. Now, let me tell you why this is a big deal. I mean, 9.9 out of 10 people I talk to are looking for money for their business right now, But here's the problem. A lot of these people have bad credit. They have no collateral. They have no cash flow. They have no lendable merits. They're not going to get a loan anywhere. Even though they will insist they can and try for years to get it, it won't work that way because they're not lendable. So in the business credit world, this is a great alternative because it's the only way you can get money for your business regardless of collateral, cash flow, or credit. So it works really good in that situation. It really works good in every situation, but especially well for people that can't get financing, and it gives you a very fast solution. You're not going to find a solution faster than business credit unless you can immediately qualify for a loan now, which is one of the major benefits of it. So when done correctly, business credit can be built without a personal credit check. This is a big deal. As a matter of fact, we teach our clients to build business credit without even putting their social security number on the application. And when you do this, you're not even giving your social to pull the credit. So they're not even able to pull your personal credit whatsoever. It's not even looked at all into the actual decision of whether or not you're going to get approved. The whole key of this is this, and this immediately breeds a little skepticism, right? Because I'm telling you, hey, you can get all this money without a personal credit check. Okay, Ty, sure you can. Well, of course you can, because what happens is if you build a credit profile for your EIN and you leave your social off an app, then what happens is they pull your EIN credit. And if they see trade lines, a credit profile, and a credit score that are good, then you get approved in a lot of cases automatically from their computers because your business credit can stand on its own. And that's what business credit is getting your EIN credit to stand on its own, so you don't need to have your personal credit tied into the actual approval decision. Now, business credit can be built quickly, and it can be obtained regardless of personal credit quality, as we just talked about, because there's no credit check and there's no personal credit reporting of these accounts. This is a big deal. A lot of people try to use their personal credit cards to build their business. And what happens, and what they don't realize, is that a third of the total credit score on the consumer side is made up of available credit. 30% of your credit score is made up of what percentage of the credit limits you have that you're using. Well, if you start trying to use personal credit with lower limits to build your business, you're going to need a lot of that credit to get done what you need to. So you're going to be charging a lot on that. And if you're charging more than 30% of the limit, you're hurting your personal scores. This is a big deal because 35% of your personal credit score is based on your payment history. So since 30% is utilization, if you overutilize your accounts, then you can hurt your scores as much as if you paid your bills late. It's just statistical. It's just the way that it is. 35% is payment history, 30% is utilization. So this is what's great about business credit is you can get lots of credit, use the credit, and it has no adverse impact on your actual personal credit score. Another benefit is that most business credit can be obtained without the owner taking on a personal liability or guarantee. Look, most of us entrepreneurs never expect to fail, but statistically 9 out of 10 of us will. And a lot of the reasons that cause failures are things that are out of our immediate control. So if you have a choice to protect your assets, your family's assets, why not take it? Well, that's exactly what business credit is for. And this is what business credit's around for. This is why every large company in the United States, private and public, has business credit, because their CEOs aren't going to be personally liable for their business debt. So the business builds its own credit profile, so it's liable instead. So this means in case of default on any of these type of accounts, they can't pursue your assets. They can't come after your home, your bank accounts, your car, and etc. Anyone can see your business credit reports. So having business credit makes you're basically more credible for prospects, clients, competitors, lenders, credit issuers, those interested in buying your company. This is different than the consumer world. In the consumer world, we have something called permissible purpose. They have to have your permission to pull your credit. But in the business credit world, anybody that wants to can pull your credit. It's actually very cheap. One of my buddies and I were just talking. He can pull business credit reports for $14, which means if he wants my credit, your credit, anybody's credit he wants for $14, he can get all the details. And this means he can get credit limits, how many employees you have. He can get your spending patterns, multiple of your credit scores. This is available to anybody that wants it. So being that any of these people, prospects, clients, lenders, anybody can see it, then you want to control it. You want to control the perception that all these people are going to have since this information is readily available, which is one big reason you want to build business credit. Almost any business can get business credit as long as it has an EIN number, an entity set up. Okay, that's it. It's as simple as that. This is what's awesome about business credit is even as a startup, you can get it. You just need to have an entity like a corporation and an EIN number. You don't need collateral. You don't need financials, and you could be a startup to actually get approved. You just need to know the proper building steps, which is what we're going to dive into today. Look, business credit's phenomenal, but here's the deal. It's hidden. Most people don't know about it. You go to Google and type in business credit, you get articles from major news sources, but no companies out there promoting it. Okay, if you go on YouTube, you'll find me all over the place, but there's not a lot of other people out there promoting business credit. So a lot of people just don't know about it, and that's why it's important that we dissect the steps, because it's perfect for so many businesses that are even bigger, that don't want the liability, or even brand new startups or people that don't have the collateral, financials, and credit to qualify for regular conventional loans. So business credit's offered in three main types. There's vendor credit. This is initial business credit that's used to start a business credit profile and score. These are not revolving accounts. These are usually accounts with net 30 terms, which means I'm going to give you a $2,000 limit, and if you spend $2,000, you owe me the $2,000 back in 30 days. It's not like you could pay me $25 a month until you get it paid off. But this is what's used to actually start the business credit profile and score. We're going to dive into a lot of these today to be able to give you access to more than enough vendors you need to start your credit profile. Once you build an initial credit profile and score, then you move into store credit. This is, credit at normal stores that you deal with, Home Depot, Lowe's, and Amazon, and Apple, and Dell, BP, and Chevron, and Walmart, Target, Sam's Club, Costco. Most major retailers offer business credit cards that you can get that are only good at their stores. Then you move into cash credit, which is Visa cards, MasterCards, even American Express cards that you can use anywhere. These are $10, $15, $20, $50,000 limit credit cards that you can use anywhere. Now, instead of telling you about this, let me actually show you some real approvals. So this is business credit. This is what business credit really is. These are cards that report to the business credit reporting agencies. This is what you're building business credit to get. So here's, for example, a $15,000 Citi approval and a $22,000 Chase approval. Here's another one for $10,000 that's actually from Chase, an $8,000 Inc. card on this example, a $7,000 Impokwa card. Actually, I pronounced it completely wrong. I'm not sure how to pronounce that bank's name. $6,000 Citi credit card. Okay, $10,000 Bank of America credit card. So look, I can honestly show you hundreds of these type of examples. I think I just randomly picked 8 or 10 to show you exactly what you can get. This is what you're building business credit for. And to give you an idea of how long it takes you to get to this level, $5, $8, $10,000, it takes you about 4 to 6 months from inception. So if you're starting a business credit profile right now, then it takes you about 4 to 6 months to get where you're getting multiple of these kind of cards. $10,000 here at U.S. Bank. Okay, here's a $24,000 card. Now again, to get to $20,000, $30,000 limit cards, it's going to take you a little longer than 4 to 6 months. At 4 to 6 months, you can usually get to a point where you're getting 5 to 10 grand, and within 6 to 12 months, you can start moving up to $20,000, $30,000, even $50,000 limit cards. And here's a $50,000 limit card, for example, and I'm not sure, this is an American Express card for $50,000. So this is what actual business credit approvals look like. This is the end goal of what we're talking about here today, is to build a credit profile and score for your EIN so you can get this kind of credit without needing the personal guarantee. So business credit with no PG, really? Well, naysayers still have a hard time believing that you can obtain credit without a personal guarantee or credit check. At the same time, we all know, and it's amazing when I have this conversation with people. They'll say, look, and I'll give you a perfect example. I was talking with an old buddy of mine, owns a big credit repair software company. I mean, he knows credit, right? He owns a software company and has hundreds of people under him that are credit repair companies. And he was still really adamant about, I'm not sure about business credit and if this really works. So what I said to him was this. I said, look, do you think Bill Gates and these other major CEOs really personal guarantee their business debt? He said, of course not. I said, so we're on the same page. Business credit obviously exists because all of these high-level CEOs have it. They obviously have it for their business. That's why they're not required to personally guarantee. But the reason for this is not that these companies are big, and this is where the misconception comes into. These big companies don't have credit because they're big, okay? But that they know the proper steps to build their corporate credit, and as that grows, the owner's personal credit just becomes less of a factor. That's it. So I tell people, look, big companies don't get business credit because they're big. They got big because they use business credit to get big. The key is that when you get to a certain size of a business, you get CFOs, you get controllers, you get people that understand the financial aspect of running a business deeper than average entrepreneurs. Those people know how to build business credit. So natural progression, as a business grows, you bring in financial savvy people and they help you build your business credit. I'm teaching you how to eliminate a large part of that waiting period and just be able to do it now. So don't think that just because you know the big companies can do it, that you can't. All highly successful businesses have business credit. It's a rite of passage. You can never really truly be highly successful in this country as an entrepreneur if you don't have business credit. I can tell you that because there's not one privately or publicly owned company that has done so. So for example, here's the Mars Corporation, 22 trade lines on Experian. Here's Dell with 83. Okay, here's Pilot with 153, Publix with 171 trade lines. Here's Walmart with 513. And I always tell the story of Walmart because it's important to understand how important business credit is. Now, just so you know, Walmart has 16,000 trade lines with Equifax. Why so many? Because what they do is they get credit with all of their suppliers, like Bounty, paper towels. They use the credit to buy their stock of paper towels from Bounty. They put the paper towels on the shelf. You buy the paper towels, and then you're paying them money that they turn around and use to pay off the credit they used to borrow for the paper towels. It's brilliant. This is why 80% of what Walmart sells is paid for by you before they even buy it. They buy it on credit. They use your money to pay the credit, and they never even have to go to suppliers and spend money. They're using the supplier's credit to be able to buy the products and using your money that you're using to buy the products to pay the actual creditor. It's brilliant. Okay, and this is how they've become the #1 retailer in the country. Okay, but here's a client of ours that had got started on business credit less than a year ago. He only has 8 trade lines, or already has 8 trade lines in less than a year. So I'm not just showing you big companies. Now check this out. He has 8 trade lines. Mars bars, the candy bar maker, has 22. And here's somebody that just started less than a year ago and has 8. He has a third as many of one of the biggest privately owned companies, Mars Corporation. So I'm showing you this because I want you to know that not only do the big boys have it, but any company at any size can do this and build business credit. And his company, just like a lot of you, had no idea how to build business credit before he actually got with us and understood the process. So now that you have a little bit of background with business credit, let's dive into the steps that you need to actually build business credit. Well, business credit really starts just the same as consumer credit does. You have no credit profile at all. Okay, you get approved for some credit that reports to the business credit reporting agencies. The business uses the credit and you pay the bills on time. Okay, then that information is reported to the business credit reporting agencies. You have a positive business credit profile established. Okay, and then as you continue to grow, you get more credit. You use the credit, your credit profile builds and builds and builds. There's not anything in this process that's any different than consumer credit. Fundamentally, it is exactly the same. You start with nothing, you get credit that actually reports, you pay the bill, the account reports, then you have trade lines report and score, and then you continue to build more and more credit, and you're able to get more and more credit. So fundamentally, it really is the same. But in the business world, you're going to start with credibility. It's the most important aspect of building your business credit. Okay, because when building an initial business credit profile, it's essential that you meet the credit issuer's criteria to actually get approved. Okay, remember, your personal credit isn't being used for the approval. So you're applying here with your social left off the application, and you have no business credit established yet. So what happens is you're applying for initial credit. You have none established now. Okay, so now you have an EIN number, and they're going to pull your actual EIN credit. Okay, and then they see you have no credit then. So what this means is it means what's on your application is all that's looked at for approval. So your application must be very strong to assure approval because it's all that's being looked at. That's why you have to really scrutinize what you're putting on that application. Okay, so first of all, let's talk about the entity you choose, corporation, LLC, etc. Well, if you truly want to separate business credit from personal credit, you have to have a separate legal entity. You cannot be a partnership or sole proprietorship. Now, don't get me wrong. Even a sole proprietorship could build business credit. But because you are a sole proprietor, you're always going to be liable for all of your business dealings, which is why you don't want to choose these options unless you have to. It's also why attorneys have to. Doctors have to choose these. They have to be partnerships because they have to be personally liable, okay, for malpractice. But you don't have to be. So you may want to make sure that you don't choose sole proprietor partnership. Instead, you want to choose a corporation or an LLC. Then you're really doing business, but you're not. Then you're actually truly a business. You're not doing business as a business. Let me try to clarify this. When you're an LLC or a corporation, you are a true separate entity. You are a true business. If you are a partnership or sole proprietor, all you are doing is you've chosen an entity that shows that you are doing business. You're not separating liability. So you need to choose corp or LLC to separate liability. Okay, otherwise these entities by default, okay, will have liability if you're a sole proprietor or partnership, but LLCs and corporations by default eliminate your personal liability, and these other entities don't. So that's why you want to stay away from them. One of the biggest reasons that we see that companies actually get denied is because they don't have the same legal name on the application as the actual state records of the corporation papers. So you've got to have the exact name. And a lot of people make this mistake because they go out and get a DBA, a doing business as, and they say, look, I'm CREDITSUITE doing business as, Joe's Credit Builder. And then on the application, they only put Joe's Credit Builder. So the lender goes to look in corporate records, can't find Joe's Credit Builder because it's a DBA, not the actual corporation name. They get denied. Now, here's what's crazy. This is one of the biggest reasons that banks deny business applications. So you supply this whole pile of paperwork to the bank, you supply and you apply under your DBA, they look up and can't find your DBA, they can't find your original company, and they decline you immediately and never tell you why. I mean, it's crazy. You spent 12 hours getting together documents, and in 3 minutes you're declined for this reason. Your full business name has to include any DBA that you're putting on the application. Ensure your business name is exactly the same on your corporation papers, licenses, bank statements. It's got to be the same across the board. You need to make sure that one doesn't say CreditSuite doing business as Joe's Credit Builders, and the other one just says Joe's Credit Builders. It needs to be uniform across the board. Okay, now whether you have employees or not, whether you're just starting, you have to make sure that you have an EIN number, a federal tax ID number. Just like you have a social security number, your business has an EIN number. This is one of two absolute essential items that the very initial vendors when building business credit are going to look at for approval. And I'll give you a hint. If you're on the live event, if you're seeing this on YouTube, you're looking at the slides. If you're listening to this on iTunes, you can't see it. So I'll tell you, I have this underlined in red bold. That means it's about as important of something as I can tell you. There are two main things that you're going to need to get approved for initial business credit. Having an EIN is absolutely one of those two. So you also want to take the time to verify that all agencies, banks, everybody, okay, has your business listed with the correct tax ID. I've made this mistake before. I wrote down another company's tax ID numbers on a document. Then I always went to that same document in the future whenever I needed a tax ID number. And I had a mess. I had my wrong tax ID number all over the place. So the mistakes happen. You've got to make sure you check for these things. So your business address has to be a real physical address. It has to be a deliverable physical address. It can't be a home address, PO box, or UPS address. Don't try or you'll get denied, especially with initial vendor credit. Okay, in our business finance suite, our credit builder program, we have the technology to check the same as the lenders do to see if you're using a PO box, UPS, or home address. We know. Lenders know, credit issuers know instantaneous. And if they're trying to get a credit, if you're trying to get credit with somebody, they see you're not supplying your personal credit, they see you have no business credit, then they see you're working from the home, then you're going to have problems. Now, this doesn't mean that you have to go out and get a physical address. What it does mean is that a lot of lenders aren't going to approve you without a physical address, so you need to look at another solution like Regus, R-E-G-U-S. Regus offers virtual addresses. With virtual addresses, you can get your mail and have a physical address, but you don't physically have to have an address. So there are alternative solutions like Regus that will work. You have to have a dedicated business phone number that's listed with 411 under the business name. Lenders, vendors, creditors, even insurance providers are going to verify that your business is listed with 411. And this isn't easy actually to do. There's a company out there called List Yourself that can help you do this, but I spent months before I discovered business credit, trying to figure out how to get listed with 411. In our finance suite, we give the client one-click ability to get this done because it is such a difficult thing to do on your own. It takes you a little bit more time than you may expect it to be to do. But again, red, underline, bold, this is the second essential item that initial credit vendors look at for approval. So the 411 and EIN is core. All this other stuff is important, but those are two things that all of these initial credit vendors are going to look at and make sure you have. You've got to get this done. Okay, you must use a business phone number. You cannot use a home phone or cell phone. Again, our finance suite uses the same technologies lenders use, and instantaneously, we know if that number you enter is a cell phone, home phone, or business phone. And instantaneously, they see you're using a home phone or cell phone, you get denied before you go any further. You really should have a toll-free number also, unless you're a pizza shop or somebody that relies on local business only. And you need to have a fax number, okay? Even if it's an e-fax. Nowadays, you can go to Ring Central and I think for like 15 or 20 bucks, get a virtual phone number, which is fine. Via VoIPs or voice over IPs are fine. And that phone number could be your fax number also. So it's very easy and cheap to get. And as I said, voice over IP numbers are okay. You just can't use a home phone or a cell phone. Okay, credit providers are going to look. Okay, if they especially need to dive deeper into your application, they're going to check your company's website. They're going to check your name out online. And when they Google your name, you need to make sure that the first thing they see is your company website. You also need a professional email address, okay? Like your name at yourcompany.com. Okay, always use the same example. You don't want to put on the application partychick2015 at yahoo.com. That's not going to get you approved. You don't want to put anything at yahoo.com or at gmail.com. You need to have a professional email address. It's simple to do. You can go to GoDaddy and I don't know, for like $7 to $12, you can get a domain and your email addresses come with it nowadays. You could use any other service. That's just who I use, so I'm throwing GoDaddy's name out there. But it needs to be a professional website, professional email address. They're super cheap and very easy to set up, and not having either will make you look not credible. We know this, right? I mean, look, I don't know about you, but when I'm researching a company, one of the very first things I do is actually go and look at their website. And then I judge them based on that. I like to see how credible they are. As a matter of fact, I take the next step of trying to find their Facebook link and go to their Facebook page. Does it look professional? How many followers do they have? That's how I judge credibility nowadays. And this is exactly how credit issuers and lenders do the same. So not only should you really have a website, but something else I rarely ever talk about is you really should have professional social media pages created too. Okay, and again, you could use services like Fiverr.com if you have no fans now to get yourself some fans. But these are the type of things that lenders look at, especially website and email, so make sure you have professional ones to stand the best chance of getting approved. You also need to contact the state, county, city government to see if there's any licenses you need. Okay, sometimes you need a license for your industry. Sometimes you need a county license to do business. It varies from state to state, but you've got to make sure you have the right licensing. You can't go in and start applying if you're unlicensed. Like if you trim trees for a living and you don't have the proper licenses, well, they're going to look and see, and if they see that you're not licensed as you should be, then it's absolutely grounds for denial. So you need to make sure you have all the proper licensing you're required to have. And then finally, you really want to make sure you take the time to verify that everybody has the same information. 411, state, IRS, bank account. Does it have your exact legal name? Does it have your right business address? Is all the information uniform on these documents? If not, you need to contact the place, whether it be your bank or whether it be to, put in an adjustment to your Secretary of State for your corporate address and make sure that they're all uniform. Also take the time to ensure every bill you get, power bill, landlord, has the business name listed correctly and comes to the business address. So bottom line, all of your stuff needs to have the same business name, same business address. It needs to be uniform because they will check some of this stuff. And nowadays there's so many public records that there's lenders like On Deck that do it automatically as part of their process. Their computers automatically pull this data into the decision-making engine. So you don't want to not have this because, again, a lot of this now happens automatically, these actual checks themselves. So you want to make sure that you get it done. So now that we've talked about building your business credibly, and hopefully you understand the value of that, because the bottom line is you can't go out and get initial business credit if all they're looking at is the data that's on your application. If you're using some home address, home phone number, DBA, and not using your real name, you make these kind of mistakes, they're not going to even waste time with you. They're going to deny you immediately. And I just went through the biggest reasons we see people getting declined for business credit. So once you've done these things, the next thing you really need to do is jump into your actual business credit reports. Now, we put together a resource that you can go, and I'm going to give you other links here along the way to where to go to the bureaus to get it directly. But if you go to our website, creditsuite.com/reports, that will give you access to DMB, Experian, and Equifax reports. You can get all of your reports at a discount right there on our page, so you don't have to go looking around at each source individually. That's creditsuite.com/reports. So business credit reports are offered by Experian Commercial, DNB, and Equifax Commercial. And you'll first want to get a copy of your business credit reports because you need to see what's reported. In my experience, a lot of people have negative stuff on their credit report that they don't even know about. So you need to make sure you're not starting with a 20 score, because if you are, well, then you're going to be getting declined everywhere and have no reason why. And the reason why is because you're starting it with bad credit that you should have had fixed first. So this is why not only do you want to pull your reports, you want to dispute any derogatory, inaccurate information you have. You really especially want to pull your DMB Experian report. Equifax, not as big of a deal. Not as many people report there, but Experian and DMB, you definitely absolutely want to get. So also, if you see negative information, right through their credit monitoring services, they usually give you the ability to actually update or dispute the negative information. You want to dispute anything you see as inaccurate information that's derogatory to try to get that removed. This is easier than in the consumer world. The consumer world, businesses have been created to do credit repair. So there are millions of disputes, probably daily, in our country. In the business world, you don't see that many disputes. Not a lot of people dispute. So from our experience, we see about negative items deleted about 80% of the time on an initial dispute. The key is to know what's on your report and dispute everything you think shouldn't be on there. Now you can go to Experian to go to smartbusinessreports.com to get a copy of your actual credit report. It's about $50 to $100 for a business report with Experian. It'll tell you how many trade lines are reporting. Do you have a business credit score? Do you have an active Experian business credit profile? And check on your recent inquiries. Now, if you ever decide down the road to work with us, as part of our business finance suite, this is free. Okay, you can check your Experian anytime you want at absolutely no cost. But if you go to Experian directly, it's about $50 to $100 to get one of those reports or get it on a monthly basis. Now, you can also get a copy of your Equifax Small Business Credit Report at equifax.com/small-business. Okay, if you go there, it'll give you the option of actually getting your Equifax business credit reports. It typically takes more time to build Equifax than Experian and DB because, as I said, not a lot of people report there. That's why it's important to apply for credit providers who report to Equifax when you can find them, because not a lot do. Okay, and it's about $100 for a full report with Equifax. You can sign up for their credit monitoring for cheaper than that. Okay, when you go with DNB, the first thing you want to do is get your DUNS number. Okay, and you can get this at dnb.com, and it is absolutely free. Okay, now, if you get DNB credibility on the phone, they're going to try to convince you have to pay for the DUNS number. They're going to tell you in order to activate your credit profile, you have to pay us. Well, that's just not true. The truth is that if you get 3 vendor accounts that report to DNB, they're going to activate your credit profile automatically whether you pay them or not. So don't feel compelled to pay for your DUNS number. They will tell you I'm a liar. They will tell you you have to. They will tell you anything they think you need to hear, okay, in order for you to pay them money. Let me tell you, I've had several of their ex-employees reach out to me and tell me crazy stories of what they sell and how they sell it. All you need to know for the topic of this conversation is your DNB number is free. If you go online and type in free DUNS number or go to dnb.com, you can get it without paying an absolute dime, and it's the first step of building your Dun & Bradstreet business credit profile. Now, you can also enroll for their DNBI self-monitoring program. Okay, it's about $39 to $100 a month, and this gives you credit monitoring basically with DNB. And you can go again to dnb.com to get that. Or again, you can go to creditsuite.com/reports. We have affiliate relationships with these guys. So as part of the affiliate relationship, they give us like, it's not a big kickback. It's like a matter of dollars. But in return, they also give you a discounted rate from what you'll find on the retail site. So it might be worth it for you to go there instead of going to the sites direct. Okay, so next you want to read and understand your reports, because business credit reports are very different than consumer reports. Most reports have 5 scores on them, assessing all different kinds of things. Like they'll look at, they'll have a risk score for bankruptcy, and if you're a supplier, and they have risk scores of that are predictive to predict your future risk, and they have risk scores based on like information they already have, and some like the D&B rating that will take your financial data into account. So you really need to dive in and get a good understanding of these, because again, there's a lot on a business credit report. Now, the main credit score in the business world, the paydex score, is based solely on your payment history. Very different than with consumer scores. And this is why you need to understand reports and scores, because in the consumer world, your score has 5 different components, okay, like credit mix and credit history and utilization, for example. But in the business credit world with a paydex score, it's only based on how you pay. If you pay your bills on time, you get a good score. If you pay them late, then your score's bad. How late you pay depends on how bad it is. Now, on these reports, they'll not only give you the scores, they'll usually explain to you what they're based on. And this is why once you get your reports, you need to spend some time going through them, because they're very different than what you're going to find in consumer world. Now, as I just mentioned, for example, consumer scores, here's how they're comprised: 35% payment history, 30% utilization, 15% late to credit history, 10% is accumulation of new credit, i.e. inquiries, 10% is credit mix. Very tough to control consumer scores. Business scores, especially paydex, very easy. Your score just reflects how you pay. This is why business credit can be built so quick. Because if you get some accounts that report to the business reporting agency and you pay them on time, then you get an 80 score. You get a good score, like a 720 equivalent consumer score. So this means that, you can come in, get some accounts, pay them as agreed, and instantly have a good score, and then use that score as a platform to springboard off and start getting more credit right away. Much tougher in the consumer world, right? Because there's a lot more at play. Even if you paid the bill on time, that's only a third of the score. You still have the length that you actually had the credit, and you have a mortgage and car loan ties into it, and that inquiry hurts you when you got the new credit, and if you got a loan, then you owe what you just borrowed, so that lowers your score. It's like this weights and balance that makes it's designed where it takes you a lot of years to get a really good score. The business world, you can get it right away, which is one of the beautiful benefits. And again, a lot of this is mapped out on these actual business credit reports. So reports list details on payments the business has made for each account, your payment record, your upper credit limit, how much you currently owe on each account, how much is past due, terms of the account, when the account was reported last updated. Okay, D&B and some of the reports also list payment details for each account. Okay, so they also add detailed commentary to the report indicating payment patterns. There's a lot on these reports, way more than you'll ever find on a consumer report, which is why you need to get the reports, you need to know them, you need to understand them, because once you understand how these things work, then it's easier for you to build a credit score and profile quickly. Okay, extra information includes current assets, liabilities, working capital, net worth, sales, the amount of sales you have. Reports also list payment details for each account and detailed commentary to the report indicating payment patterns. So all of these type of things are what's on your business credit reports. There's a lot of data on there, which again is one more reason you need to get the reports, know them, and understand them. Okay, these reports look and feel different than consumer reports, so dig in, go through them thoroughly, and better assess your actual business risk. So now let's talk about business credit building, okay? How to get approved for actual vendor credit. And let's look back at where we've been and where we're going. So we talked about, first of all, if you really think about this and break it down, it's kind of common sense. So we're building our credit profile for your EIN. We don't want it linked to your social, so that means we need to fill out apps without your social security number. Got it. In doing so, the credit will be linked to your EIN, i.e. your business, which will mean you're not personally liable. Cool? Got it. Business credit's a lot faster, easier to build than consumer credit, in large part because the scores are simple. All you need is credit that reports. You pay the bill, you get a good score. Got it. So next you need to know that, again, when you start getting started, all you're going to be going in with is your application, your personal credit and your business credit. Your business credit's not built, your personal credit's not being supplied, which means everything you put on the app is vitally important. Got it. So make sure your business is set up credibly, and then see what your business credit reports look like now, especially if you're not a startup business, just to make sure that nobody's reported stuff on there that's inaccurate or that you don't know about. Now it's time to really start building business credit, which is the third step of this 3-step webinar on how to get started building credit, is to get approved for vendor credit accounts. So there's really 2 ways to build business credit. One is offered by a company called Dun & Bradstreet Credibility. I need to tell you something. D&B Credibility is not Dun & Bradstreet. They are 2 separate companies. D&B Credibility started in 2010, and so far they've had a class action lawsuit filed against them every single year that they've been in operation. I think last time I checked, there's about 5 or 6 class action lawsuits against them. Why? Because they're calling people and telling people you don't have a credit profile, people are looking into you, you have to pay us thousands of dollars for our credit builder program. And look, it's okay for them to sell this credit builder program I'm going to show you, but it's unethical when they lie and tell you that people are inquiring and you look like a ghost and it looks like you're in bankruptcy, and then you have to pay them thousands of dollars to do it. Those tactics are just scare tactics. They're unethical, which is why they're getting sued so much. So first, no, D&B Credibility is different than D&B. Do not look at them the same. D&B is a publicly owned company. Okay, D&B Credibility is privately owned. Big difference between these two. D&B Credibility offers one way to start a business credit profile, and they'll try to convince you it's the only way, even though it's not. They'll charge up front upwards of about $2,000 to put trade lines on your report using your current creditor. So here's how it works. I have a phone line with Ring Central. I go to D&B and say, I'm going to pay you $2,000. And D&B says, okay, I'm going to let you add 5 trade lines to your account. And you go, I have an account with Ring Central. And then they add Ring Central as a trade line on your account for you, and all of your current payment history with Ring Central shows up. Doesn't sound like too bad of a deal. Here's one of the problems. These accounts only report to D&B. And most underwriters that are in the business credit world use Experian. So if you're only building credit with D&B, you're not going to get approved for a ton of real credit because you're ignoring Experian and Equifax. That's the first problem with their actual credit builder. They choose what can and can't get added, and most can't get added. On one webinar I've done in the past, I've shown a list from their website of everything they will not add to the report, and it's like crazy. They won't add your rent, they won't add your lease payments, they won't add your credit cards, they won't add most of the accounts you have. They won't add utilities, so they won't add your phone, your water, none of those type of things. So if you eliminate utilities, credit cards, rent, and lease, you don't have a lot of other stuff that would be acceptable for them to add. So that's another problem, is even though they'll add 5 trades, you're not going to have a lot to add unless you're using like a software of some sort, because they let you add so few. And you don't get usable credit at all, which is another problem. Well, one more problem above that is the fact that in order for them to add somebody, they have to usually get in touch with this person right away. So they're going to call your software company. If your software company doesn't answer the phone, it could take a week or 2 more weeks to get them to call back to that software company after you spend an hour or 2 hours on the phone with D&B to get them to call back. So it's real problematic there. And another problem with this is that you don't get usable credit. You know, in my experience, people don't build business credit for fun. They build it because they need credit, like they want money to use. Well, with this, they're just adding some creditors you already have to your credit report. It does give you a credit profile and score with D&B only, but you never really get access to real usable credit, and you get no guidance from them on how to actually get to store credit and cash credit. So it does do somewhat what it's supposed to do, but it's very problematic way because of these to actually build credit. Now, the other way to build credit is doing much the same as you do, and we talked about with consumer credit. You get approved for new creditors that report to the business credit reporting agencies. You get real credit you can use, and at the same time, you build your business credit. It's dual benefit. And that credit report's establishing your business credit profile and score. So it's kind of like, it works well. First of all, I'm going out and getting a $500 office credit card that I could use to buy office supplies. Well, that's cool. I'm a startup business. I could use $500 to buy office supplies because I need office supplies. And not only do I get something I immediately need and can use, but then as I pay the bill, it builds my business credit in the process. Two main massive benefits. So when we talk about obtained vending, and those really are the two different ways. It's the only two ways you can build business credit. You can either have DMB add trade lines to build your DMB report, or you could get real usable credit and pay the bills and build a credit profile the same as you did in the consumer world. And this really is the most popular way of building business credit because, again, in the process, you're getting access to real credit you can actually use. So when you have no prior business credit reports established, you must start building business credit using vendor accounts. These are accounts from vendors who give you initial credit even if you're a brand new business, and this credit reports to the business credit reporting agencies. So you get real credit and build your business credit at the same time. Now, again, as we talked about, vendor credit are usually creditors that will give you credit over terms like 30 days to pay them back instead of revolving. Okay, so that means you've got to pay the full bill within that 15, 30, 60, or 90 days. Sometimes they're net 7 accounts, just depends. Okay, so if you're set up on net 30 terms and you purchase $300 worth of stuff, as we talked about, that means you got to pay that $300 back within a full 30 days. That's what net accounts mean. Okay, you can get products and services that your business needs. You defer the payments for let's say 30 days. So this actually helps you ease cash flow, especially in your startup phase. And a lot of vendors will approve your company if you only have an EIN number and 411 listing, as we've talked about before. Okay, so first, you apply and get the account. Okay, next you use the credit. You got to spend in almost all cases for it to get reported $50 or more. That's a very important tip. Okay, finally you pay the bill early. Remember, as we talked about, the Paydex score is based on when you pay. So the minute you get that bill, you need to pay it, because if you pay it early, that's going to give you an even higher score. Because as I said, remember, how you pay is what makes up that business credit score. So those accounts will then report to the business reporting agency, and what DNB says, up to 3 reporting cycles, which means within 30 to 90 days, if you followed this process, you got credit, you spent more than $50, you paid the bill, within 30 to 90 days, voila, your account reports and you now have a trade line, business credit profile, and score. So once reported, you'll have a credit profile, okay, you'll have a credit score, okay, and a good score if you paid the bills on time, and you'll have trade lines. Okay, you'll then need to have about 5 of these accounts to start getting the next stage, which is store credit, the next step in the business credit building process. So there's 3 important things I just told you. First, when you get the bill and you pay the bill, then that means you have a credit profile, score, and trade lines. Those are the basis of business credit. Your trade line reports, it gives you a score, it gives you a profile. You use the credit profile and score to springboard off of and start getting store credit when you have 5 accounts. It's exactly how it works. So let's talk about some actual accounts here. So I'm going to give you access to some actual starter vendor accounts. Pay close attention, because this is why I did the webinar, because so many people ask me this question, because these accounts are very hard to find. 95% of trade vendors do not report to the business credit reporting agencies. So that means 9.5 out of 10 times you try to find a company that's a vendor, they're not going to report, you're not going to get your business credit built. Finding ones that report is a really big deal. So you've got to start a business credit profile and score with starter vendors. These are vendors who will give you an initial credit even if you have no credit or trade lines now. Most stores like Staples will not give you initial starter credit. Don't even try applying. I mean, I'm telling you, so many people come to me with this. They go, Ty, I went to Staples, I went to Lowe's, I went to my bank, and I did what you said and left my social off the application and applied, and they denied me. Well, of course they denied you. You have no credit built. You have to build credit before Lowe's and Staples will approve you. You have to build credit before you can get a cash credit card. The same as you did in the consumer world. If you went into Staples with no credit profile or score, they will not give you a consumer credit card. But if you went into Staples with 3 accounts reported, a credit profile, and score, they would give you a consumer credit card. Same in the business world. If you go to Staples with no credit, they will not approve you. But if you go to Staples with some initial trade lines, profile, and score that are vendors, they will approve you. The process has to start with vendors first. Stores second, cash third. Has to be that way. No way around it. Vendors first, store second, cash third. Vendors first, store second, cash third. Has to be in that order. In order to get to store credit, you've got to have 5 trade lines reported. This is where these vendors come into play. Laughlin & Associates is a great one to start with. They deal with corporate setup and compliance services. Okay, so they help you with a lot of stuff that deals with actual corporations, minutes, all kinds of stuff. Now look, might be some services you don't need. I don't care. Buy them anyways. Because if you're spending 50 or 100 bucks worth of services that give you some kind of small benefit, the huge benefit is that you're building a business credit profile and score. And the truth is there's so few trade lines in the startup world of business credit building, sometimes you might have to make concessions and get some that aren't ones you would necessarily use. But again, it's a very small sacrifice considering you're able to build your business credit in the process. They report to Experian. All they need is a 411 listing and EIN, and they report very quickly. 30 to 60 days, you're done. And they give you net 30 terms. So Laughlin & Associates, great place to go as a starter vendor. Okay, another one is Quill. Now, Quill sells office supplies, which everybody needs. Office packaging, cleaning supplies, and they report to D&B. Okay, you've got to place an initial order first. Sometimes they'll turn you down. And you might have to order, remember, more than $50 worth of stuff. You might have to place 3 orders with them for them to actually get the account to report. Some clients don't have that problem, some do. If you order items each month or even within a month for 3 different times, then they'll usually give you the credit. And I've never seen them not. So they'll either give you credit right away or make you place 3 orders of $50 or more before they'll give you the credit. This isn't actually accurate. You don't need to wait 3 months and get something once a month. You could get something today, order something else next week for 50 bucks, wait a week or 2, order something else, and usually on that 3rd order, if they haven't approved you before, they'll approve you for credit. Gempler's, Office Depot, actually it's the same company now. Office Depot just bought out Gempler's. They sell work supplies and products. They report to D&B, and just the same as Quill, they sometimes make you place that $50 order. They sometimes make you do it 3 times before they'll give you initial credit, but they're a great source because they sell office supplies, and who can't benefit from office supplies? Reliable is another one that actually will work good and will actually work really good. I can't remember. I think Reliable, I think I have this wrong. I think Gempler's is separate and Reliable was just bought by Office Depot. So write down all 3 of these: Gempler's, Office Depot, and Reliable. Okay, they also sell office supplies. They report to D&B, Experian, and Equifax, which is huge. Okay, and they're the same as I already described. Sometimes they're going to make you place about 3 initial orders before they'll approve you. Sometimes they'll approve you sooner. It depends. Like if you got Quill and Laughlin and they reported, and then you went to Reliable and applied, and then they would approve you without the 3 orders because you had some credit reported. But if you have no credit reported, sometimes you need to place orders of about $3 or more in order for this to actually work. Okay, just so you know. Okay, the third is Uline. Now, Uline sells shipping, packaging, and industrial supplies. Okay, they report to D&B. You've got to have your DUNS number for approval, and they will ask for 2 references and a bank reference usually for approval. But again, they sell stuff that you really need, so usually that should be able to really provide you a benefit. And the first few orders might need to be prepaid to initially get approved for net 30 terms. Okay, Monopolize Your Marketplace is another. Everything you need to know about marketing and business in 10 audio CD set. Okay, they report to Experian. They are true starter account, okay, and upon checkout, they'll usually give you the option of doing $59.99 payment installments off of what they sell, this marketing kit, and they do report it to Experian, which works really well. The first charge takes place in about 30 days. You've got to have your bank account, EIN, and deliverable address in order to actually get approved, and it takes about 30 to 60 days for them to report. So all of this being said, let's talk about some things to remember. You might need to get some vendors you won't often use just to build that initial credit. You do not put your social security number on the applications, or you will have a personal guarantee and credit check, which you do not want. You pay your bills early, the key to a very good score, and do not start with store credit. You'll get denied. Wait until you have 5 accounts reported before you apply for store credit. Do not apply for cash credit until you have 10 accounts. Don't go getting a Visa, MasterCard until you have at least 10 accounts reported. So that's going to wrap up for today. I'm going to finish up a little bit earlier than an hour because I have another actual show coming up here in about 6 minutes. And I've got some kind of issue here with my microphone or speaker, so I'm not exactly sure what it is. I need to get it fixed. So if you have any more questions, anything we can help with, there's our actual number. 877-600-2487 is our direct number, info@creditsuite.com. I'm tied into that email. I'll often be the one responding, answering your questions, or check us out, creditsuite.com. And don't forget, we've got a free 4-step guide that maps the actual steps, including getting store credit and cash credit available right on our main site, creditsuite.com/EIN. I don't have time for questions right now, but if you have questions, make sure you go ahead, give us a call, send us an email. And if you are checking out this video on YouTube, make sure you like and subscribe for even more content. And the same on iTunes. Make sure you go ahead and subscribe to our iTunes because you get a lot of also additional content there. So I want to thank everybody very much for taking the time to attend. I know how valuable your time is. Hopefully you got a lot of information out of today. Thanks, everybody. Have a great day.